There are consensus amongst traders that there is such a thing as market manipulations. However, when we talk about this, and then it's always in the context of technical analysis. So price takes the form of a W or an M pattern in a stop hunting scenario. Then we see manipulations form a head and shoulders pattern, or candlesticks looks like hammerheads and engulfing candles and pinheads. But a media induced market manipulation, this is where the media builds up hype about a stock or a commodity, and it lures in traders, lures them into the market to either buy or to sell. The earliest example of this that fits this criteria is the tulip bubble in the 1600s. So prices are shooting up for no reason, and then a massive crash. And then one of the more recent examples are, we all remember when Bitcoin was supposed to go to the moon, remember? And then this happened, a massive crash. And then the biggest one for me, the Swiss National Bank. Let's not forget about this one, the peg that was never going to be released. And then a few days later, the exact opposite happens. They release the peg, and then traders get caught on the wrong side of more than 2,500 pips on just one currency pair, the euro versus the Swiss franc. But those are all media-induced market manipulations on a macro scale. So they use macro fundamentals. So these are very difficult to spot beforehand. But in the next example, I'm going to try and show you a manipulation that we can use in our favor. So it's more of a micro manipulation. So it's a manipulation that uses market sentiment. So prices are pushed via sentiment to a better level. So if we look at the most recent example, on the 17th of January for the pound, there was a scheduled news event, retail sales. So the forecast, the figure that was supposed to be aimed for was about 0.5%. Then the actual figure comes out at 0.6%. So it's like 0.1% difference there. And then this is what news comes out. Everyone is posting retail sales extends worst run on record. Bloomberg says it, news commenters says it, News Locker, a whole lot of you Google it and then it will be there. The Bloomberg says British consumers shun the stores during this crucial Christmas trading period. Yeah, and the pound is going to, they priced in a 75% chance of a cut in interest rates. So now that comes out on the 17th of January on Friday, that news, yeah. It pushes the price down, 155 pip move as soon as the news comes out. The sentiment comes into the market, pushes the price down. And then that happens on the Friday. And then Monday, Tuesday, and Wednesday, all of that profits gets wiped out and people start buying because fundamentally the pound is really strong, but the sentiment was pushed down. So what we do is we use our technical analysis. This candle here is the sentiment coming into the market, pushes prices down into a great looking level. It has 1, 2, 3 touches there, 4, and it's inside, there's an excursion and it's at a nice level. This is how it looks on the 15-minute. So the sentiment pushes the price down based on that media, yeah, on the 17th of January. And the setup is just absolutely perfect. We have our divergence here. This is our beginner strategy entry based on that, and that's 180 pips as soon as prices hits that level. So now for an opportunity that we might be able to take even as early as next week. We have news coming out. The interest rate news is coming out next week. But on Friday, this Friday, the 24th of January, we had some good news coming in. Flash services were good. The manufacturing PMI numbers were both good for the pound. Yeah, that comes out on Friday. And then the news obviously is going to harp on this one. The chances of an interest rate cut now falls on Friday. That's the headline of the Telegraph. And then most of the news is going to going to focus on this. They say the pressure eases on the bank to cut rates. Yeah, so this is all good for the pound, and the actual number the two numbers actually came out very good. And then look what happens. The good number and the price falls. The Great British Pound falls 120 pips. Now, I mean, if you're trading like a fundamentally or sentiment based on news, then you would have bought based on the good news of the pound. But look, comes down 120 pips. Now, how can we use this in a trading example? I'm using this again as a sentiment being pushed down for some reason, and it pushes down to what we deem as a good level. So I'll be looking for buying opportunities. So not just buying as soon as it hits the level though, I will be looking for this micro manipulations again at the level. So thanks to the sentiment being pushed down, I am interested in buying alongside my fundamental view that the pound is strong. Sentiment pushes it weak for whatever reason, and then at these levels I'll be looking for a technical reason to get in. So it's the news plays in your favor. It pushes prices down to a better level based on whatever the news is, and then you look for a technical setup, another manipulation. So it's like a manipulation inside a manipulation. So guys, that is what I'll be doing next week for the pound. I don't know if it's going to work out, nobody knows, but that is the plan. Thanks a lot for watching, guys. Bye bye.